Good morning and welcome to the market right here on ET Now. And before we begin the show today and in brand new week, Team ET Now wishes to convey its heartfelt condolences to the over 275 lives which have been lost in the triple train crash tragedy which occurred on Friday evening in Orissa when the Howrah-bound train crashed with the capsized bogies of the Coromandel Express, which had collided with a stationary freight train seconds earlier.
In fact, the first train on the section where the accident happened started its journey at 10:40 p.m. yesterday. That's 51 hours after the horrific crash. Meanwhile, in an unusual move, the centre as well announced a CBI probe into the accident as the railway's preliminary investigation singled out interference with electronic interlocking system, which ensures safe movement of the trains as the root cause of the crash.
Okay, back to markets though, and it seems like a fresh all-time high is very much in sight this morning. We're already staring at a nice smart start for the SGX Nifty, which is indicating a print of 18,700. And by the way, the Nifty spot from Friday's close is just around 2% away from its life highs. We've been seeing that resistance around the 18,700 zone already in the past, but let's see whether we can take that level or not. The broader markets as well have been outperforming. In fact, the indexes have managed to gain for a 10th consecutive week. The Nifty Midcap 100 as well is already at an all-time high. I think optically we're almost there in any case.
Well, Anisha, if you frankly ask me, set of circumstances which are fueling the markets higher, they are intact, and that is what really matters. When you are in this kind of a strong uptrend, you can argue about levels on a daily basis, but frankly, this market is not really aiming at this is the end of the rally and this is the point beyond which FI buying will not continue. We must realize that there is a reversal happening in the world at a global front. US equities are back. China trade is reversing, flows are absolutely gangbusters, and the desire now to participate long is clearly evident. The FOMO crowd has kicked in. You can see that in terms of how the mid and the small cap indices are doing. Bottom line here is that the set of circumstances which have fueled the market higher, they are intact. And if the set of circumstances which have fueled the market higher, if they are intact, I guess it's pointless to say that this is the top and this is as far as markets will go. Now, what may really reverse the market, it has to be an event, something unknown, something which comes as a shock for the market. It could come globally, it could come locally, it could come from Reserve Bank of India credit policy later this week, or valuations have to become so sticky that it gets impossible for markets to sustain any kind of a momentum. So valuations are okay, flows are strong, global cues are supportive, Nasdaq is in a good groove. So I don't see a concern on the horizon which in a sense is going to smash the market down.
Oh yes, indeed. But perhaps a fact as well that, we want to conclusively move above that 18,550 mark in trade. But as Nikunj said, a lot of factors that seem to be supporting the momentum. And clearly that is going to bode well for us this week, especially as we're just 1.9% away from those life highs. Well, the global setup, a quick glance at that. Well, you did have the US markets, which wrapped up comfortably in the green on Friday's trading session. It was a decent jobs report as well that came in. And you did see across the board the US markets that did manage to gain 6 straight week of gains, by the way, for the Nasdaq. The European markets closed higher. And Asian markets primarily are in the green. But the other talking point is going to be crude oil prices. In fact, you have seen a rise coming in crude oil prices. This is following the fact that the OPEC kingpin of sorts, that Saudi Arabia, has put their decision to cut the output by additional 1 million barrels per day. The output will decline to 9 million barrels per day from around 10 million barrels, according to the Energy Ministry in Saudi Arabia. And Nikunj, analysts say that this is going to indicate concerns when it comes to weakening demand for crude.
What is OPEC doing, Avanne? I mean, OPEC is trying to ensure that the price and demand and supply, they in a sense are matching. The demand for oil is slowing down. China has not opened up as everybody thought and expected. And the demand which was anticipated to come strong at least ahead of the summer driving season in US, that is also not looking that great. So at a time when there is general slowdown happening in large economies, US has turned net exporter. OPEC in a sense is trying to cut supplies. Why are they doing it? Well, they don't want price to come down. Now, this time around, unlike last time when they had cut output in the month of April, which was a much more meaningful cut, the crude markets just saw an immediate uptick. And then that was later sold into. Today, if you look at OPEC, today you look at the oil market is just not gone anywhere. So that just tells you that markets right now are completely convinced that demand for oil is going to remain low, and it's going to remain low for long. And I think it is getting evident in the fact that there is no panic reaction, there is no nervousness, and if at all everyone is reconciled to the fact that whether it is China or whether it is EV or whether it is what is happening to the US economy, the demand for oil and petroleum products will remain low.
Right, we also have Jonathan Bharat, who is the Chief Investment Officer at Probus Securities, joining in on the show to get in his sense on what exactly the outlook is on the same. And Jonathan, we'd just like to get in your thoughts, given the fact that we have seen Saudi Arabia's decision to cut production yet again by another 1 million barrels per day.
Absolutely. Look, I think it's quite interesting. I think the main concern we have with oil at the moment is how the Chinese economy is going to actually behave. I think with that stalling, OPEC Plus are having concerns in terms of trying to keep the price quite stable. Saudi Arabia coming out, and then also OPEC Plus suggesting that they are quite happy to extend those cuts into 2024, in my mind suggests that there is concern that we can see economies slowing down and hence not get the demand that would force prices higher. So if anything here, we did see the spike in oil prices, but they have come back to some more realistic levels. And I think expectations are for that to see a little bit more weakening demand, and prices should start to come a little bit lower.
But Jonathan, you think that, there could be more to it, because Saudi Arabia has very categorically said that this cut is extendable. So it seems like this is not it.
I think 100% right. I think what you'll find, and the interesting thing is we actually thought we'd see more work out of OPEC between Russia and some of the other states, because they wanted more cash coming through. But when I do look at Saudi Arabia, I get a sense that they're saying, well, look, we're going to continue to have the supply cuts there and to create stability. Now, the word stability means to reduce supply. So they're really concerned of the global economy. And if that does start to weaken, then obviously the revenue for them will be hit. So, yes, I think this is ongoing. Extended it to 2024 should support prices. But let's really see how the global economy performs. And I think in some areas it's looking softer.
Okay. So, Jonathan, are we in for a surprise ahead of the US summer driving season?
Look, I think generally we would see more of a ramp up, but we've already seen an extended move. When we did see prices just over the last couple of trading sessions, they have come back. I generally think that the drive time is important. Years gone past, we've seen prices move high, particularly with the gasoline price. But I think at the moment we've really got to see how those numbers start to come out. We'll just see whether the drive time really does kick off like it normally does. But at the moment, I think there are more important data sets out there, or macros which we're following, which will dictate the price.
Jonathan, great to have you on the show. Thanks for joining in with that quick take. That's the update coming in crude, which, by the way, has now settled down. If we can just bring up that graph up for you. But this week is an important one. You've got all eyes on the MPC as well. The 6-member MPC is going to be meeting on June 6 to 8. And it seems that RBI is going to pull the gun this time and would be a status quo.
They did not fire last time.
Yeah.
So now it's almost easy to understand that what the Reserve Bank of India would do. Look, the cat's out of the bag. He's given a sense on inflation. He's given a sense on GDP growth. He's insisting that it is not a pivot, it is a pause. And I think he's going to maintain that. Look, everything is in their favor. Macros are looking strong. Growth is just about coming back. Now, what happens to monsoon? That is the problem. Could inflation make a comeback? That is the dangerous part, because the prices of, the prices of some cereals are again coming back. So if we are in for a bad monsoon and prices of cereal they go higher, then we could be in for a tough second half. But for the moment, it looks like that RBI, considering what's happening in the world, it's going to be in pause. They will not change the word, they will not change pause to pivot. They will be cognizant of the fact that monsoons is delayed and this time around cereal prices have gone higher. But on the other side, oil prices, vegetable oil prices, oil seed prices, all of them are lower. So expect them to come out and perhaps be much more benign in terms of where the interest rate cycle is headed.
Okay, so it's definitely expected to be a pause this time around from the Reserve Bank. But let's move across then and find out what some of the top global commentary has been. My colleague Anisha joins in to give us a roundup of just that. Morning, Anisha.
Hi, good morning. Let me start with the jobs data that came on Friday evening, much hotter than expected when it comes to job addition on one hand, and on the other hand you had the unemployment data, which also was quite high, and that is what led Mr. Paul Krugman to say that if you want to make the case that economy is running too hot, you have data for that as well. That would really back the the premise of rate hikes coming in. But if you want to argue about the soft landing in progress, there are numbers for that too. So a bit of a mixed commentary coming in as far as the data is concerned, but the only interpretation that remains completely indefensible is the fact that US is right now in a recession. That's the word coming in from Paul Krugman. Shifting focus to what Alerian had to say, he points out how the US equity markets has picked up steam, and that's been accompanied by a surge in yields as well. However, he believes that given the data that we have got over the weekend, the Fed might be pushed to hike rates further in the coming meeting in the month of June itself, or maybe in the month of July. So he is expecting some rate hike, and he also believes that Fed will be less resistant to do that rate hike given the fact that the jobs data has been quite resilient. Lastly, just wanted to point out what Bill Ackman had to say. He of course points out the risk that US is facing with respect to the debt. Yes, that deal has been signed and the can has been pushed down the road by around 2 years, but nonetheless he points out how the country is running into huge amounts of debt. He talks about how the country needs a new leader, somebody who can handle the financials quite well, and he's backing Jamie Dimon.
Very much for giving us all of those details. So that's the latest coming in from the global commentary. Let's move right on then and connect with our chartists. We've got Naresh Mirani and Kunal Bothra joining in. All right, Kunal, let's begin with you then. Given the fact that we have a healthy handover from Wall Street and last week was pretty flat for the equity markets, what are you working with? Do you think that we'll decisively cross the 18,550 mark?
Good morning, Avanne. So I think, yes, this time around we should be breaking past about the 18,600 mark, which was the previous swing high for the Nifty a week and a half out back. Now, over the last one to 1.5 odd week, we've gone to a 200-point range, 18,650 as the higher end of the resistance, 18,460, 450 as the lower end of this range for the indices. And interestingly, the extent of time we've spent gets reduced at every range which we'll be establishing. So I think at 18,000 to 18,400, we spent almost 1.5 to 2 weeks, and at higher ranges on the upside, the amount of time getting spent is quite less. So that's an interesting aspect about the markets, that we are getting ready for a breakout and less time for a consolidation. Now again, the sector mix which happened on Friday was also very interesting. You had the bank Nifty which sort of underperformed most of the other sectors, but then Pharma made a very interesting comeback. Large cap stocks made a good comeback like L&T, Reliance, etc. So I would probably expect that the markets would probably get a bit more broad-based, as well as many of the large cap names which have been out of action over the last 1 or 2 weeks. I think they could probably get back.
Right. Naresh, hi, good morning. New all-time high on the Nifty this week?
So could be over the next couple of weeks. But more importantly, we are hitting new all-time highs on Midcap indices. We are not very far away from we've hit 52-week indices, 52-week high on the small cap indices. We've hit a new all-time high on bank Nifty. So overall, the structure is clear. One by one, we are seeing that momentum. It's just that in the Nifty, we are not seeing the heavyweights contribute.
Reconnect with that audio because there's a little bit of an issue, and get in Kunal's top recommendations in the meantime. So Kunal, looking at the charts, given that you're confident about 18,600, what are you working with by way of stock specific calls?
So I'm going with large cap names, and one of the large cap stocks is Sun Pharma from the Pharma pack, which I believe should be heading towards a breakout back again. And so I think the stock has come out of its 200-day moving average after quite some time, also broken past about the 1,000 mark, which has been a big resistance for Sun Pharma. and the momentum has come back again to the stock. So would suggest a buy. 1025 could be an immediate target. 975 is a stop loss. And L&T is also another stock which I'm backing. Could make a strong comeback. It's established a corrective phase and a consolidation, and I think now seems to be ready for a turnaround back again. So buy on L&T 2300 as an immediate target. Stop us at 2200.
Okay, let's find out what Naresh's take is. So go ahead, Naresh. What were you talking about when it comes to the markets? Do you think we'll be able to sustain?
Yeah, so expecting it to eventually making a new all-time high is now a formality on the Nifty, because it has done so on the Bank Nifty, it has done so on the Midcap indices. We've hit a new 52-week high on the small cap indices. And a lot of indices are making that move. The case which is there is the fact that we've not seen the heavyweights like HDFC Bank, Reliance Industries, Kotak Bank really take up any lead. And that's the reason Nifty is still away from an all-time high. The structure is positive. Even in the last couple of sessions when the Nifty is not made a strong move, we've seen a strong move in the mid-cap and the small-cap indices. So the structure remains positive. Whether a new all-time high happens over the next 10 days or the next 20 days, the expectation is we do cross the all-time highs, and the momentum continues to be better on the broader indices.
Let's get in some stock-specific ideas as well. Naresh, what's on your list?
So looking at two large caps, first is a buy on Larsen & Toubro. After correcting from 2400 down to 2180, 2220 levels, the stock has started showing a reversal pattern. On early charts, it gave a breakout on Friday, expecting it to now again start up a new leg, go towards an all-time high. The stock is the largest in the capital goods space, has underperformed relatively, but overall the trend remains positive. Get into a new leg here towards a new all-time high, a target price of 2500, stop loss at 2200. Second is a buy on Hero MotoCorp. Now that's a stock finally coming out of a 10-year consolidation, 10-year of no returns, and underperformance for almost 10 to 15 years. The only returns which have come is in the form of dividends. Now over the last 1.5 months, the stock has started giving a relative strength breakout. And also the stock came close to that 2850 to 2950 band, which has been a resistance for the last 12 to 18 months. Good move post the monthly numbers. Overall, the strength indicates that this could be a stock which could actually become a leadership stock in the auto pack now, the new leader coming in. Stop loss at 2800 and a target price of 3400.
Those are some stock-specific ideas coming your way. But the big question is the Sensex at 1 lakh a possibility soon? The biggest market veterans believe so, including Chris Wood, Shankar Sharma, Nilesh Shah, as well as Mark Mobius. Here's a slice of their interaction with Nikunj on the sidelines of the India Economic Conclave on Thursday and Friday in New Delhi.
Now, that to me is very reasonable. Yeah, because I would be disappointed if the Sensex had not touched 100,000 5 years from now.
I'm absolutely certain it will reach 1 lakh. Now, whether it happens in 4 years or 6 years, frankly, is really a meaningless debate. But looking at the nominal GDP growth rate, which we are looking, you can safely say we can grow between, say, 12 and 14%, maybe 10 and 14%. You will approximate that number, and if you compound it at that, so in 4 years, roughly from 60,000, you add another. Say it comes to approximately 1 lakh in 4 years. I mean, it's not a reach to see 1 lakh, just at the simple compounding of the nominal GDP rate. I think it's a given, 100%.
Market को predict करने की कोशिश मत करो. More often than not, you will be wrong. But today, is 1 lakh Sensex looking unimaginable? Answer is no. And my request to this audience will be, just don't think about 1 lakh Sensex. Beyond that also there is a much, much longer journey.
Generally speaking, if a country is growing at 7%, you can expect companies, reasonably good companies, to be growing at 14%, double the growth rate of the country. So it's very possible that you can get this incredible growth in the size of the market and the actual investments in the market, no question.
Yes, Pai, he is with IMD. Let's connect with him to take a stock of where the monsoon progress has been and the fact that there is a delay in Kerala. Should we get perturbed and alarmed about it? Mr. Pai, good morning. Thank you for joining us. There is a delay, and now looks like the delay is going to be extended by another 3 to 4 days. IMD is forecasting that monsoon should hit Kerala soon, and the soon could be this week.
Yeah, good morning. Actually, last almost 1 week, monsoon is organizing over Arabian Sea. And if you observe last 2-3 days, clouding has been developing. The winds are getting strengthened. As of now, winds has strengthened to the level that we want, but their depth is only up to 2.1 kilometers. So we are expecting that next 2-3 days, conditions will become more favorable. Depth of monsoon westerlies will increase. And already, since yesterday, there has been good rainfall activity, fairly widespread activity over Kerala. And we are expecting that next 2-3 days, the winds to become more stronger, depth of westerlies to become more, and rainfall activity to increase, and conditions to become favorable for onset of our Kerala.
So help us understand then, Mr. Pai. Could you possibly give us a date of the onset of the monsoon, considering there is a little bit of a delay, but it's pretty much on track, like you're saying?
Yeah, as I said, almost monsoon is, in our doorstep. So we need only just a push that monsoon. You can see that currently it has covered most of the southeast, many parts of Southeast Arabian Sea, South Sri Lanka, and South, Bay of Bengal, also West Bengal. Only a surge at any time can lead to reach our Kerala. Though, as I said, we are expecting next 2-3 days increased rainfall activity, but only for a defining the onset, we need certain criteria to be covered. So that is what just we are waiting. But otherwise, monsoon is very close to the southern tip.
Mr. Pai, so far, it seems that it's a normal prediction for the monsoon. Could you tell us a little bit more? Because from we understand, it's a 96% with a 5% plus minus room for error.
Yeah. So actually this year, because of, associated with the expected El Nino this year, which is almost certain, because all the models are indicating probability of around 95, more than 95%. So generally, El Nino related, associated with that, monsoon is to be below normal. It happens. But along with that, we also have got a favorable condition, expected favorable condition over Indian Ocean, which is what we call a positive Indian Ocean dipole, which can to some extent compensate the negative impact of the El Nino. That's why, though there will be rainfall will be less than 100%, but it will be within the normal range, that 96%, which we have.
Highlighted, Mr. Pai, about this southwestern Arabian Sea whirlwind formation. Help us understand what could be the implications. Could parts of Gujarat and Maharashtra also have an early onset of monsoon?
See, as of now, there is some cyclonic circulation over Southeast Arabian Sea, which we are expecting next 24 to 48 hours to become a low pressure area. But, different models are indicating different way. So if the low pressure moves along the coast, we can, much faster progress of monsoon can be observed along the west coast. But some other models are also indicating this low pressure system to move more away from the coast. So then after reaching our Kerala, there can be 2-3 days stagnation. So we have to wait and watch, because this is a transitional period, because monsoon is just there. And many models are indicating different. There is a lot of uncertainty in the model forecast from different models. So just maybe it become more clarified after 1 or 2 days. So we are just waiting for that. But as of now, we say that monsoon will be there in the southern tip within the next 2 or 3 days. Further progress will depend on how the system moves, which has got a lot of uncertainty.
Final question, Dr. Pai. Historically, how many times monsoon has been delayed? It has got extended from last week of May to first week of June. And when that has happened in the past, what has been the rainfall distribution pattern for rest of the year?
See, has been many years when monsoon got delayed, even 8th or 9th June. For example, year 1997, which was one of the strongest El Nino ever seen in the last century. In spite of that, monsoon rainfall was 102% of the long period average. So in short, to say that there is no relationship between monsoon arriving over Kerala and total quantum of rainfall that we receive in a season. Because even after reaching Kerala, it can move very faster. Even last 30 or 40 years, we have seen that compared to earlier year, monsoon is now covering entire country 1 week earlier than previous normals. So things are not like that, delay can cause the quantum reduced rainfall. There is no relationship at all.
Mr. Pai, and thank you for being the flag bearer of good news. Seems that monsoon is pretty much on track and you're already seeing some showers on the Kerala coast. But good to speak with you. On that note, we're going to take a very quick break. Come right back. We've got lots of stock info lined up on the other side.
Back with the market, let's take it then to our colleagues to find out the stock-specific news that's making the headlines. To begin with, IT major Infosys came out with their annual report, and what's interesting to note is that the number of times the word artificial intelligence or AI was used in the report, and it was also interesting to note the change in compensation packages of the top bosses. Well, for all those details, we've got Anisha right back with us to take us through the details. So, Anisha, how many times was it mentioned, AI?
Well, yes, one of the first IT majors have come out with the annual reports, Infosys, and the clear focus and the clear takeaway for me was the dependence and focus coming in on artificial intelligence, and that's explained by the number of times this term is actually used in the annual report as well. Over 50 times as far as AI word is concerned, and even artificial intelligence featured multiple times, and it was also a prominent part of the commentary coming in from both Nandan Nilekani, who's the chairman of the company, as well as Salil Parekh, the CEO. In fact, Nandan Nilekani says that they have done a lot to make Infosys an AI-first company. They have been able to identify it first and have been helping their clients to build the strategies around artificial intelligence as well. In the area of talent as well, he talks about how the entire skill set needs to upgrade to become AI-friendly. And going forward, he believes with the kind of technology that they have and the fact that they have been at the forefront of technologies like AI and cloud, as well as generative AI, they have been able to bring out multiple options for future as well, and they are also bringing to the global clients the ability to accelerate business value and amplify human potential using the AI technologies, and prominently talks about Infosys Topaz as well. Shifting focus towards Salil Parekh had to say similar commentary coming in, talking about the capabilities that they have built in AI. He does call financial year 2023 as a strong year for the company, and they also say that they have managed to return the maximum shareholder value in the last 5 years. Going forward, he does talk about the macro headwinds that the economies are facing, but given the fact that the company has been able to be very nimble, he's quite confident about the outlook. So not much color coming in terms of the outlook or the uncertainty or how the client conversations have moved, but a lot of focus actually coming in on artificial intelligence. Let's look at the other important bit, which is always of interest for the masses as well, and that's how the remuneration for the CEO has moved. Now, the total remuneration has dropped by 21% to around 56 crore thereabouts versus 71 crore that Salil Parekh took home last year. However, having said that, the large part of that cut is actually stemming from perquisites and ESOP conversions, etc. Because if you look at the fixed salary as well as the bonus payout, it's seen a healthy rise. For Nandan Nilekani, who's the CFO as well, he's also seen a jump in his payout by around 10%, by 28%, I beg your pardon. So that's the number coming in for Nilanjan Roy. However, for Nandan Nilekani, he's decided not to charge the company for the services rendered. So he, of course, hasn't taken home any remuneration on account of that. But interesting takeaways coming in from Infosys, the first one of the IT majors, so always of great interest.
Sure is, and those numbers certainly are pretty interesting to dissect. And of course, major focus on AI, as Anisha has just highlighted. We'll be watching out for this stock in trade today, but the other ones that we'll be watching out for are the likes of Eicher Motors, Escorts, Kubota, as well as Dabur. There have been multiple analyst meets that have taken place. What are the key takeaways? Vamakshi joins in to break it down for us. Vamakshi?
Well, yes, JP Morgan caught up with a whole host of counters, starting off with Eicher Motors. The management is appearing to be cautiously optimistic on demand and does not see production constraints as of now. Hunter continues to perform well with almost 35% of its demand coming in from people below the age of 25 years. The raw material inflation is expected to be flat largely going ahead, and the cost structure is expected to remain the same for domestic as well as the export markets. The management highlighted that they will be focusing on the exports market specifically and are in fact looking to grow the market share over there as well as cater to higher price points. Apart from that, keep an eye out on Escorts as well. Their company has highlighted that the May tractor retail sales have seen a pickup, and in fact growth in FY24 should be largely driven by positive farm fundamentals. Escorts is expecting low single-digit growth as far as the domestic tractor industry is concerned in FY24. They believe that they will revert to 14 to 15% EBIT margins in the agri-machinery business by FY24 end. The implements business is also expected to scale up materially in the coming years, while the railways equipment division is also expected to see healthy growth. And lastly, keep an eye out on Dabur. The management has highlighted improving rural sentiment, which is boding well for revenue growth. Market share trends are expected to stay healthy across categories, and in fact growth trajectory is expected to revive for health supplements, hair oils, toothpaste, while tapering for beverages. EBITDA margin is expected to be within 19 to 19.5% coming in for FY24. So on the back of all these management meets, watch out for these counters.
All right, thanks very much, Vamakshi. We will certainly keep an eye out on those candidates, but it's also pharma majors like Lupin and Indoco Remedies that will be in focus. Now, Lupin has come out with a new launch announcement, and Indoco Remedies has received the OAI status by the US FDA for its Goa plant. What exactly are the details of these two announcements? We've got Samit here to walk us through the details. Morning, Samit.
Well, Lupin has come out with this new drug, Darunavir, and they have launched it in two different strengths, that is 600 mg and 800 mg. And according to analysts, the total market size of these two strengths stands at close to $308 million. Now, this drug is used for HIV treatment, and analysts also believe that Lupin has a 180-day exclusivity for this product. Now, for other strengths, that is 400 mg, 300 mg, 150 mg, and 75 mg, there's a joint FTF that has been signed by Lupin with Mylan, and this means that they can launch these strengths as well going ahead with Mylan. Now, the estimated combined market size of all the strength stands at close to $800 million. So that's a big market coming in for Lupin going forward. And for Indoco Remedies, if you see, there's a negative news coming in, and that's the fact that the Goa Plant 2 has received an official action indicated by US FDA. Now, this implies that the existing products will continue to be shipped from this plant, but the new approvals will be stalled going forward. Now, US FDA had inspected this plant in Feb 2023, and post-inspection, they had issued 4 observations. Now, the street was not expecting an OAI for this plant because the observations that were issued were not at all complex in nature. Now, US sales contribute around 16% of the total revenue, and 70% of the US sales come from this plant itself, and because of this, the US growth will now be impacted. Now, this company was expecting US growth to be around 30% in FY24, now, which analysts now believe could well as well be a nil in FY24 compared to FY23. So that's the reason why Indoco Remedies would also remain in focus.
Say hello and good morning to Sandeep Sabharwal, and let's understand what he makes of the current market. So Sandeep, the party continues. Point is how long the party will continue. I mean, the Cinderellas of the world are now saying that 12 o'clock is nearing.
Well, yeah, so I think we are at 12 noon. 12 midnight is a long way off.
Noon, midnight is still a long way off. What gives you the confidence?
The carriage is not turning into pumpkin yet.
Exactly.
Yeah.
So I think there are several drivers which include
Party चालू भी
a
नहीं हुआ
sort
था.
of
Party was this was according to Centrala, this was an evening party. 12 noon तो party भी नहीं चालू हुई थी संदीप.
it's pre-party.
Okay.
Then there'll be party, then there'll be post-party.
Okay, so let's understand that pre-party and why do you think that market strength will continue?
There are several drivers which include, I think the critical part is peaking inflation and peaking interest rates. I think that's always positive for equities. Secondly, we are in a sort of Goldilocks as far as India goes, where growth is sustaining at particular levels, while inflation in India has peaked out much before global inflation. And that will help us sustain and incrementally increase growth going forward. Right now, whatever growth we are seeing is despite very slow consumer demand. As inflation remains stable or comes down, I think we'll start seeing consumer demand also revival, which some companies have started indicating that that's happening. And that was also like two-wheeler sale data, which has come out recently, also indicates that. A lot of people talk about valuations, how valuations are above historical valuation. That's fine. Like historical Nifty valuation, maybe 18, 19. Now we might be at 19, 20. It doesn't matter 1 point here or there. Typically, in a accelerating growth, improving economic environment scenario, price earnings ratios will expand and they'll go more towards sort of what we call bubble territories of possibly 30 times also where most of the past bubbles have peaked. And so to that extent, we are not nowhere close to that. And globally, cash positions are very high as people have been scared of investing in equities. And some part of that we saw in May with the kind of flows we've seen into India. I believe flows globally will accelerate into equities. So there are a lot of very difficult to concisely explain many of the reasons, but I think there are several drivers which are good for overall emerging markets and especially India.
Sandeep, just wanted to understand what is it that you made of Infosys' annual report takeaways? I mean, the fact that they're laying that much emphasis on AI seems like they're moving with the times clearly. Of course, the salary cuts aside.
Yeah, so I think all these companies have to talk of AI, and because AI is a reality none of us can escape from. And to that extent, how companies adapt to that. So there are some companies which will not be impacted so much. There'll be some companies like it is widely believed, and although technically very tough to evaluate the impact, but that the IT services industry will be impacted the most negatively due to a lot of these automated code generation systems, etc., which artificial intelligence pulls out. So they might be talking of it, but it's a big challenge for their business and how they cope up with it too. Can they use it to accelerate growth, or we are in a phase of prolonged deceleration? That is something we'll need to see.
On then, time to shift gears and focus in on stocks on the editor's radar. Today we're discussing the metal space as well as AU small finance. Let's begin by talking about metals because clearly we have seen that underperformance take place within the space. There's a lot of factors, Nikunj, that have attributed to it, but can we see a turn in the tide?
Not for all metal stocks, Avanne. I'll tell you why. Because so far the beginning of the year, the positioning was that China will open up, metal demands will come back. I guess now the realization has kicked in that look, everything which is solely connected to the Chinese demand may not do equally well. I think metal stocks in my book as a category may not be the outperformers in 2023. However, selectively there are some steel stocks which you may want to look at, and largely because coal prices have come down, and incrementally that's a big positive for some of the metal companies. Look at domestic companies and look at companies which essentially are supplying to the domestic market, because a weak dollar means they would have an advantage, and the advantage largely lies to the fact that in India metal prices are global denominated. So currency is on your side and international coal prices have come down. So it's going to be a double advantage for some of the steel companies. And the steel cycle also globally is not reversed, unlike what we've seen, let's say, in something like copper. So a lot of the metal stocks globally, I guess, have a readjustment which should happen largely because of the Chinese demand not opening up.
All right, so that's the readjustment that we're expecting, but it won't be across the board when it comes to metals. Let's move aside then and talk about another mover, and that is AU Small Finance Bank. Now, it's interesting because in the last 15 days, we've seen two downgrades come in. Citi is the latest one. They've got a target price at 725. They've downgraded the stock to neutral. And you've had Chris Wood as well flagging off this very same stock in his portfolio.
Look, this stock has done exceptionally well, and there was an overhang that what will happen to Sanjay's reappointment, and Sanjay Agrawal got reappointed for 3 years. The result reaction or the stock reaction was immediate. It went up 20% the very next day. It's up 30% after that RBI ka hara jhandi, that reappointment approval by Reserve Bank of India. Now, AU Bank, I think, is a brilliant franchise. But a brilliant franchise which after the run-up is actually available at fair to expensive price at the current juncture. The construct for AU is that it will continue to grow in the range of about 20% plus because the base is low, and ROA would be anywhere between 1.8 to about 1.7 or 1.9. That's the guidance from the management. When you're buying a stock which is giving you that kind of a combination of 20% growth with a ROA of about 1.8 to 2% and ROE of about 15 to 16%, 3-time price to book is what markets historically have given such a franchise. Right now it's 3 plus. So it's the recent run-up which in a sense is just making the stock look slightly bulky. So the stock will have to lose some fat. It has to go on the treadmill, muscle up, maybe time-wise correction, or maybe 2 quarters of earnings.
Okay, there you have it. So that's AU Small Finance, Aisha, as well as the metals basket.
Okay, let's get you some more stocks. And here's some stock ideas coming in from Dipan Mehta. And why is he lacking those stocks, as well as Sanjeev Bhasin?
See, I think that there have been many challenges for Aisha Motors. Not now, I think last 3 to 5 years since we have seen the success of Royal Enfield. Many competitors have come, but they have not been able to make a significant dent. I think Aisha is miles ahead when it comes to competition in terms of launching new products. And what they are selling is a complete lifestyle, and they appeal to a certain class of consumers who are adventurous in nature. And that kind of a brand and that kind of aspiration can never be done by Hero MotoCorp or Bajaj. It's like any tier 2, tier 3 OEM trying to sell a luxury car. That just doesn't work. So I'm not that perturbed about any challenge coming from Hero MotoCorp or even Bajaj Triumph tie-up. The real threat for Aisha is going to be from the electric vehicles, because their main crowd also, the main consumers also are quite eco-friendly. And they care about the environment. So unless Aisha has a significant offering in the electric vehicle side, maybe 2-3 years down the line, that's when they'll start to face all the problems. But for the time being, I'm not too perturbed. I think that with the way they have expanded the distribution and the export opportunity available for Aisha, they should be able to sustain mid-teens type of growth for at least 3 to 5 years or so.
Electronics is a very sweet spot. Even electric appliances, look at Havells, look at Voltas. I mean, I can just give you the ancillary industries which are doing extremely well, and where these are going to be part and parcel for the next few years. Railway stocks were always few weeks before the rail budgets, and then they tended to die down. But look at the performance of RVNL or an Ircon or a Titagar wagon. It's telling you that the capex and the intensity with which the government is focusing on rail and in-road transport is humongous. That's why these companies' margins and they're maybe the best ever in history. And I think they've run up a lot, so they've doubled, tripled in the last 2 years. They can be caution and because they're overowned. Titagar and RVNL have been huge doublers from recent times.
Sandeep, what is the importance of this week's credit policy from a market standpoint? Because the bank Nifty is already at a new high. Everybody knows that Shaktikanta Das is not going to increase rates. If at all, he will sound really constructive about the path ahead.
Yes, I think monetary policy becomes irrelevant now for a long time till we get to the actual rate cut cycle at some stage. Now, when that will happen, we don't know, because the possibility of a prolonged pause is higher given the fact that growth is sustaining at particular levels in India and could possibly accelerate. So in this scenario, for a central bank to be actually cutting rates becomes difficult unless and until inflation goes much below 4%, which is not the base case. So I think for a few meetings, in my view, monetary policy will become irrelevant in India.
AGX Nifty is indicating that we are in for a good start. Kunal, what's the all-time high?
18,888.
18,888. Okay, now where are we? 18,728, which means...
That's the SGX.
Yeah, I mean,
Futures.
SGX is indicating that we could be in for 100-point gap start. You need 200 points approximately to make a new high. So it may happen today, it may happen this week, it may not happen for next 10 days, who knows. But you're just almost at a new high. Midcap index at an all-time high. Bank Nifty at an all-time high. And if that was not enough, look at global markets also. They're absolutely roaring in terms of what the construct of the market is. So Sandeep, what's the new theme you're betting on? Couple of years ago it was defense, then from defense it moved to railways. Railways has become manufacturing. Anything you were looking at in terms of a theme?
No real theme per se, so I think we need to keep a lookout on whether we can get into some companies which actually benefit for artificial intelligence, etc., which doesn't seem to be there in a listed space in India. Then from the old set of stocks, I think there is a clear indication that companies are saying consumption is bottoming out and could recover. And consumption stocks have been relatively subdued. So I think that's where some opportunity could come up in some of the retail stocks or the pure FMCG companies.
Okay. Suresh, I'm looking at a list of some stocks which have gone down. I mean, stocks which have gone down on strong volumes. Angel One is one, Nuresh. I mean, we've talked about this stock extensively in 2021, 2022, and it's nowhere close to its 52-week high. Is the best of the gain for something like Angel One, Motilal Oswal? Have they reversed?
So I think Angel One has relatively been better in terms of a price correction, but the rest of the older broking names have just collapsed. So Motilal Oswal has been terrible if you go back from pre-COVID till now. Even from COVID lows, it's not done much. ICICI Securities has seen a lot of, say, consolidation, but from a top of almost 850, 900, the stock is at 500. So if you look at all the broking names, Angel One has been relatively better because over the last, say from 2021, it has gone up, say 2021 used to be 400 rupees, today it is 1300 rupees, though on the upside it was 1900. So for now, the problem is Angel One could be doing better than the rest of the names, but the sector is in a doldrum or say a major top is already in place. So that's the only reason don't like Angel One, because the sector is not interesting at all.
Sandeep, we are in the middle of a bull run. We are in the middle of what could be called as a strong financial inclusion. We are in the middle of what could be called as a multi-year theme. But AMC stocks, brokerage stocks, all of them are at multi-month lows.
Yeah, brokerage is, so both of them are suffering from sort of profitability squeeze. So margins are coming down despite the business growing, and the squeeze in margins is such that the growth cannot compensate for it. So I think that's the challenge which brokerages as well as AMCs are facing. Most of the AMCs products have been typically underperformers, and that's also leading to investors moving out and looking at other avenues. So they are incrementally losing market share, although the SIP inflows continue to be strong. From the brokerages perspective, like there's very little to distinguish from one from the other. Everyone is just going for the lowest brokerage, given the fact that with new SEBI regulations, your funds, etc., are relatively safe. So it's not that the brokerages can turn rogue and run away with your money. So to that extent, there's very little to distinguish from one broker to the other. So I don't like brokerage stocks because I don't think they have any real moat going for them. So that's where I'm not looking to invest in these sectors at all.
All right, what do we have? May Class A truck orders, they're down 2%. Year on year, they may be up. Okay, year on year, they are down 2%. Month on month, they are up 9%. Sandeep, you've liked Bharat Forge in the past. Time to revisit that one?
I think so. I think it's reasonably priced. It had a run up above 900. Then there were some disappointing result prints as well as the news flow from the US related to Class 8 truckers, which has incrementally a lesser play these days for Bharat Forge, but that's what somehow the analysts in the market seem to be tracking. So I think it's reasonably priced. It needs some trigger for it to perform, as in from some good quarterly result, etc. But strategically, what the company is doing in terms of diversification into various other spaces like defense or aerospace or other industries, I think that'll bear fruit going forward. I would think that it should be a decent play at the current prices.
As well as the other stock which is going to be in focus today. Their April-May updates have come out and their average monthly transacting users have gone up by 24% on a year-on-year basis, and the merchant payment volumes as well are up a staggering 35%, and again these are year-on-year numbers. The devices subscribed as well now stand at 7.5 million on total count, and the new subscriber additions, they stand at about 4 lakhs for the months of April and May. Sandeep, you think the worst for some of these, Paytm, PB fintechs, etc., is behind us?
Worst in terms of performance, yes, one could say that the kind of losses they were making, I think the losses will come down. But does that create an opportunity for investors to make a sustainable play? It's still doubtful because of their business models. For example, Paytm, if you see the entire improvement in profitability or whatever they are talking of is coming from their loan origination where they earn commissions on originating loans. That is not a high PE business because it's just like a commission agent working like a commission agent. So I don't know. I don't see these companies getting built in a manner where one can say that they will have some sort of a moat for years to come. So I would be skeptical buying into these companies.
Just want to check in on what's on the brokerage radar this morning. And remember, HEG and Graphite have been in the spotlight of late. Jefferies has maintained a buy on both of the counters, so they slashed the target price on both, saying that demand headwinds will persist. And beyond the near-term headwinds, decarbonization stays as well as a medium-term tailwind. They've cut the EBITDA as well for FY 25-26 by 88 to 16%, saying that there'll be a higher impact in FY 24. Just let's get in a view, Sandeep. I wonder if you track both of these counters and what the outlook is.
Sorry, which company were you talking about?
HEG and Graphite.
I think it's going to be a challenging time for them, especially given the fact that if you look at where the steel cycle is going, steel prices in China are back to 2022 lows after rallying more than 20% from there. That will put pressure on global, all the incremental sort of ancillary industries, and we could also see production cuts, etc., coming up. So I don't think there's any big story in these stocks at this stage.
Get in a view on the charts going as well. And Kunal, your outlook on HEG Graphite, given the kind of breakout that we witnessed?
So the momentum has come back into these names. Now, I think we'll have to look at this in the last 8 or 10 days of charts for HEG and Graphite. HEG specifically, the stock made a high of 1250, corrected towards 1125 in a matter of 3 or 4 days. And in the next subsequent 3-4 days, the stock went into a breakout mode and managed to break past about the 1250 mark, which means it's a classic V-shaped recovery for HEG as well as the similar charts for Graphite. Now, what has happened is in this last 3 days of price recovery, these stocks have given technically what we call it as golden crossover, where the 50 DMA has crossed back above the 200-day moving average. That is a classical sign of a possible turnaround for HEG and Graphite. So my sense is that these stocks could gain momentum even further from current levels.
Okay.
Right. Sandeep, the real go-to area right now is the entire urban luxury or the niche consumption space, whether it is watches, cars, wine company like Sula. What looks interesting in that space? Because typically how economies move is that the niche consumption, which is dominated by the affluent class, that in a growing economy always does well. And if India is headed towards what happened to US in terms of an economic, these categories and some of these specific categories are only going to explode.
Yeah, so I think niche consumption will do well. Unfortunately, most of it tends to be in global brands, and to that extent, what we are seeing is premium global brands on the consumption space are doing much better now in India than some of the medium to lower price products. So, but I think giving a specific example at this stage is tough. So I think from the companies which recently listed, maybe something like a Vedant Fashion could be a gainer in this, but there also the valuation at this stage seem to be a bit excessive. Sula, Vineyards, etc., although the wine consumption is growing, but if you look at the pace of their growth, etc., I think it's not so exciting that we give very high Ps to that.
Okay, that's the view coming in. Let's move right on then and also check in on the pre-open rates. That should just flash for you in about a couple of minutes from now. But in the meantime, Naresh, discuss the breakdown that we saw on the charts. Lemon Tree on Friday's trading session, and you also had something like a Gujarat Gas. What are the charts reading?
So, if you look at Lemon Tree, the previous high back in November was around the 100 mark. So that has acted as a resistance. The stock has taken a little bit of a hit. The stock topped out on the numbers. And now again, the trend is still positive for the whole sector as such. I would expect 85, 88 to be a support going forward. So you want to buy closer to that. And the next time we go above 100, it should go higher. So Lemon Tree still looks interesting. Overall trend is positive. The stock back in 2018 also used to be 85 odd levels. So the stock has done nothing over the last few years. So still a promising stock. Want to buy the dips closer to 88. Gujarat Gas has been a disappointment. The stock was on buy list until we got stopped out finally. The breakout above 500, 495, 500 did not play out. We've seen the stock took a dip a day before this, and there was some follow-up selling on Friday as well. So technically, we get back into the same range of 450 to 500 now. So no trade here because the possibility of that breakout is again taken out. So for now, avoid.
Fair enough. That's the view coming in on some of the stocks. That's our breakdown in trade. Sandeep, let's get in your quick thoughts then as to what you're advising when it comes to the entire cement basket.
Cement is an intriguing space at this stage because on one hand, we are seeing that the cement companies are unable to pass on price hikes. So they try, but the prices come back because supply is so strong. On the other hand, we have got good demand trends and a complete collapse of sort of input cost pressures, and which will aid their profitability. And that's the reason why the stocks have also gone up so much. So it's a very tough sector to call, frankly. So there are tailwinds which at this stage look better than the fact that they are unable to increase prices. So I would say that people can buy these stocks, but I think at somewhat lower valuations.
Appreciate your time, Sandeep. Good to have you on board. Thanks so much for joining in. Okay, a quick look at those pre-open rates, and it's up 0.5% on the Nifty right now, quoting around the 18,600 mark. For the Sensex, it is down 100 points. Let's find out what exactly the outlook is when it comes to mid-cap trading recommendations. Naresh?
So that would be a buy on M&M Finance. We've seen the NBFC space look interesting, the MFI space look interesting. M&M Finance was the first one to break out and keep up the momentum in the space. The stock has moved up from 220, 230 levels to 290. Made a flag formation here. The last correction was not much, indicating the momentum is strong. Gave a breakout out of that flag pattern, a new 52-week high done. Expecting this to continue its leadership, a stop loss at 290 and a target price of 330 in the short term.
Okay, watch out for that stock. Kunal?
That's a buy on graphite. That stock looks attractive. In fact, we've seen momentum coming back again, volumes making a strong push. So buy with a target of 415. Stop loss for this trade can be kept at 350.
That's the market setup for you right now. Well, we've got a big exclusive story. North India-based cash trap wheat flour manufacturer Shakti Bhog or Shakti Bhog Foods has defaulted on a 7,000 crore loan, huge amount. Sources say the company is currently undergoing insolvency proceedings at NCLT. And who are the leading bidders, and what could be the future ahead for Shakti Bhog Foods? My colleague Ankur is here, and what is he picking up from his sources?
Yes, sources say that ITC is among the bidders for Shakti Bhog Foods, a wheat flour manufacturing company from the north, which had turned bankrupt after it failed to clear its dues. The other two bidders for the company are Vidya Polymer and Shanti GD Ispat and Power. Now, as far as this bankruptcy proceedings are concerned, these three bids have come in for the company as per sources, and the bids are likely to be in the range of rupees 350 crore to 500 crore. Lenders will do the due diligence of each bid and what are the payment terms, when the money is likely to be paid. So all that procedure will be followed, and after that, highest bidder will be declared for the company. The total dues of lenders is close to around rupees 7,000 crore, out of which State Bank of India is likely to be the highest creditor, and it has dues of over rupees 4,500 crore for the company. This company had been in the news for promoters landing up in jail because Central Bureau of Investigation was also investigating this case. Now, as far as the recovery is concerned, it will only happen after lenders declare the highest bidder and NCLT approving the final bid.
Keep an eye out on all those stocks to track in today's trading sessions, and which are the other ones on the editor's radar. Take a look.
The beginning of the year, the positioning was that China will open up, metal demands will come back. I guess now the realization has kicked in that, look, everything in which is solely connected to the Chinese demand may not do equally well. I think metal stocks in my book as a category may not be the outperformers in 2023. However, selectively, there are some steel stocks which you may want to look at, and largely because coal prices have come down, and incrementally that's a big positive for some of the metal companies. Look at domestic companies and look at companies which essentially are supplying to the domestic market, because a weak dollar means they would have an advantage, and the advantage largely lies to the fact that in India, metal prices are global denominated. So currency is on your side and international coal prices have come down. So it's going to be a double advantage for some of the steel companies. And the steel cycle also globally is not reversed, unlike what we've seen, let's say, in something like copper. So a lot of the metal stocks globally, I guess, have a readjustment which should happen largely because of the Chinese demand not opening up.
All right, so that's the readjustment that we're expecting, but it won't be across the board when it comes to metals. In the last 15 days, we've seen two downgrades come in. Citi is the latest one. They've got a target price at 725. They've downgraded the stock to neutral. And you've had Chris Wood as well flagging off this very same stock in his portfolio.
Look, this stock has done exceptionally well. And there was an overhang that what will happen to Sanjay's reappointment. And Sanjay Agrawal got reappointed for 3 years. The result reaction or the stock reaction was immediate. It went up 20% the very next day. It's up 30%. After that, RBI ka hara jhandi, that reappointment approval by Reserve Bank of India. Now, AU Bank, I think, is a brilliant franchise, but a brilliant franchise which, after the run-up, is actually available at fair to expensive price at the current juncture. The construct for AU is that it will continue to grow in the range of about 20% plus because the base is low, and ROA would be anywhere between 1.8 to about 1.7 or 1.9. That's the guidance from the management. When you're buying a stock which is giving you that kind of a combination of 20% growth with a ROA of about 1.8 to 2% and ROE of about 15 to 16%, 3-time price to book is what markets historically have given such a franchise. Right now it's 3 plus. So it's the recent run-up which in a sense is just making the stock look slightly bulky. So the stock will have to lose some fat. It has to go on the treadmill, muscle up, maybe a time-wise correction, or maybe 2 quarters of earnings.
All right, that's the view coming in on AU Small as well as the entire metals basket. But let's move on then and focus in on Tata Motors. It's been the best performing PV stock on a year-to-date basis, up 33% on year versus some of its peers. What's fueling the rally, but what is the outlook when it comes to the fact that they have acknowledged that growth will moderate 5 to 7% this fiscal? Let's look at both sides of the coin, the bull versus the bear case scenario. And we've got Sharad as well as Ashesha here to break it down for us. And Sharad, let me begin with you. What's the bull case scenario for Tata Motors?
Well, yes, in focus we are having Tata Motors and Ashesha. The bull case scenario, first thing comes to my mind is JLR's turnaround, and that has actually been showing in the stock prices as well. But there are 2 important triggers for the JLR turnaround, and firstly, of course, it's the EBIT margin that is coming at almost, you could say, 6.5% in the 4th quarter of FY24, and also the debt reduction part. Now they're expecting the debt reduction to actually fall below the £1 billion mark by FY24.
Well, yes, you did say talk about debt reduction plans of the company, but let's not forget the fact that company's debt at the moment stands at about £3 billion. And as far as their order book is concerned, order book of JLR has been declining 3rd quarter FY23 onwards, and this is quite worrisome, isn't it?
Well, yeah, but Ashesha, there is an interesting thing about it. The PV and the EV leadership. Now, the passenger vehicle segment, Tata Motors is enjoying a first mover advantage. And that also, the data which you are taking out is the 80% market shares it's having in this space. And a lot of launches are also coming up. So that is a very interesting portion.
Well, yes, let's talk about passenger vehicle segment first. In fact, Tata Motors passenger vehicle segment growth is expected to moderate to about 5 to 7% from the 27% growth that the company witnessed in FY23. As far as the electric vehicle segment is concerned, competition is strong at the moment and it is expected to intensify from here on. In fact, Maruti and Mahindra have a couple of launches lined up in electric vehicle space in calendar year 2024 alone.
And Ashesha, there's one more important thing, that's the commercial vehicle segment. And over here also, there is a leadership enjoyment, and the company has actually improved the entire margin profile over here, and the numbers are pretty strong. It's almost 8.4% margins were recorded in the EBIT numbers in the 4th quarter.
But let's not forget the fact that in the commercial vehicle segment, Tata Motors has been lagging its peers both on volume front as well as on margin front. In fact, on the medium and heavy vehicle segment as well as in the light vehicle segment, company's market share is below the pre-COVID level mark as well.
Well, yes, but do remember the electrification theme that has gained space, and of course a huge amount of capex commitment has been there. Now this is coming up more than 1,53,000 crores. Now this is expected for capex to come, and also Ashesha, interesting thing is 6 new SUVs will be coming from JLR segment in the electrical vehicle segment.
Well, yes, it does have strong electric vehicle plans, but also important to note that at the moment they have just one electric vehicle in the kitty. In fact, market share of JLR of Tata Motors in the electric vehicle space has been declining from 16% and it has now come down to 6.5%, which is quite bothering, isn't it?
But let's talk about the brokerages over here, and CLSA has given a maintained buy rating with it with a target price set of almost 624 rupees per share.
But we also have some brokerages which are not bullish on the sector, on Tata Motors in particular. In fact, UBS has initiated coverage with a sell rating and they've given a target price of 450 rupees per share.
Thanks very much, both Ashesha as well as Sharad, for presenting that bull versus bear case scenario on Tata Motors. Let's move right on and find out what the index calls are. Well, there you have it. All 3 of our guests are saying hold on to your positions when it comes to the Nifty this morning. Do remember, we're talking about tracking that 18,500 to 18,600 mark, perhaps even hitting those all-time highs. That could happen this week. So that's what the Moodometer indicates. Ditto when it comes to the Nifty Bank Index this morning as well. Hold on to your positions. say our chartists.
Very basic question, Naresh. We are on a threshold of a new breakout. If there is a new high which is made on the Nifty after a gap of, let's say, 18-19 months, markets will not stop there. I mean, it could easily extend itself to 19,000 plus. Then why hold? Why not a clear buy? Why should one not anticipate a breakout and create long positions?
So it's precisely the reason you're looking at Nifty. The point is Nifty is a bunch of 50 stocks, and that is where you're not seeing similar charts. So you're not looking at, say, if you pick up a HDFC Bank, you're not at, say, 3% away from an all-time high. Reliance is 10% away from an all-time high. There is HDFC Limited, which is another quite a bit away from an all-time high. Then you have a Kotak Bank, which is 10% away from an all-time high. You have the whole IT pack. So when you look at the index, you suddenly realize that 50 to 60% of the stocks are way far away from an all-time high. So when we make a new all-time high breakout, we generally see a bunch of Nifty 50 names actually breaking out. So you can go back to the historical times, whether it was in 2020 when we crossed 12,400, or back in 2017, or in the previous times in 2014 also. So we are yet away from that sort of move, wherein say such an all-time high should actually take us 10, 15, 20% higher. I don't think the current setup, if you look at the Nifty 50 stocks, is anywhere similar to it. So my viewers will keep seeing this move up, then a pause, then a move up. But for now, the view is very, say, hold. Buy on dips was the view last week, and now again we get into the hold. So you want to be a buyer on dips rather than buying momentum here, because the constituents shape up is not as great.
To go. And Kunal, the same question. Why not preempt a breakout?
I think we've already been long on the index since last 1 week, and especially at a time when the index was at a point where it had come back towards the major support, I think 18,050, 18,100 levels. And then just below that 18,400 mark is where we reinitiated a buy on the index. So I think it makes sense to hold on to those positions itself. That's why hold on the index.
Where is Paytm? And for the number I want to look at for Paytm is actually the loan disbursements. It's not the UPI transaction. Those are meaningless now. It's the loan disruption. That's where it's not this. Not disruption. I beg your pardon. The loan distribution there, because that's the number which just tells you that profitability for Paytm is going in which direction. See, Paytm has 3 businesses. UPI, where they make sliver of margins like 2 paisa. Then they have loans, where they are acting as a third party, where they are using their platform to connect with platform users to NBFCs. And third is where they sell movie tickets, event tickets. That's again a fat margin business. It's the middle part which is where Paytm is getting its profitability from, in terms of where the loan book, in a sense, where they're acting as a distributor, how that's moving. Their MDR is there 4%, and 4% is a very high MDR for any business to command. But Paytm has been commanding that largely because of the platform service they've started offering. 20 seconds to go. Paytm could be the dark horse for the day. You would definitely look at some of the pharma names, because that's where I think bulk of the activities also started. So these are 2 stocks where I guess you would see little bit of action. One, I would basically in pharma look at formulations. Lupin, Sun Pharma, Cipla, the companies which are not in API but which are in formulation per se. First rates will just start coming up on your screen now, and the first rates on your screen any second. It's a Monday morning. 82 points higher for the Nifty. Actually, we'll start the counter now, because we are less than 200 points away from an all-time high on the Nifty. Less than 200 points all-time on the Nifty. Well, that means we'll have to order the bells, the whistles, and hopefully the cake very soon. But markets are just moving in the right direction in terms of what we were anticipating and what we were expecting. Look at the breadth. Hello. For one stock which is going down, 15 stocks are going higher, and this is one of the most amazing and one of the most powerful market breadths I've seen in a long time. Everyone is on the same side of the boat. Nobody wants to sell. There are no sellers. FIs are buying, DIs are buying, HNI is buying. So whether it is FOMO or late realization or perhaps desperation, everything is at play. When you see a breadth like this, you would say, touch wood, what a great Monday morning it's been so far.
Yeah, absolutely. A lot of other stocks which are in focus as well. Hero MotoCorp, they've launched that new 100cc motorbike. HF Deluxe at a price level of 66,000 thereabouts or so. So that's one stock in focus. Tata Motors, they're looking at setting up a 20 gigawatt lithium ion cell manufacturing unit in Gujarat with a capex of a sizable $1.6 billion. 539 at Tata Motors as we speak right now this morning. There's also Bharat Forge. We just highlighted the May North America Class A truck orders have come in higher for month-on-month units, and Bharat Forge has started off at that 800 plus level right now in trade. Positive news flow for Lupin, for Biocon as well. Lupin has launched an HIV drug with a market size as large as $308 million. And Biocon, which has got no observations issued by the US FDA for their Bangalore oral solid dosage plant. So that's another stock which is in focus. Minda Corp too, the board has approved fundraising of about 600 crore rupees. Pre-call, we highlighted this one as well. The promoters have acquired a 1.38% stake in the company via open market. That's another stock which we're highlighting this morning. And then ONGC and Oil India as well. The fact that Brent has now neared that $77 to a barrel mark now that the Saudi has cut the crude output. These are also stocks which are seeing some amount of buoyancy this morning as we speak right now. EU Small Finance Bank, considering Citi has downgraded the stock now to a neutral from the earlier buy. That stock starts off down by about 1%. And there's Ipca Laboratories as well, wherein the Income Tax Department has carried out a survey proceedings at the company's offices. That's another stock which is in focus. This Brigade as well. Housing sales are looking to jump about 15 to 20% in FY24. That's what the company has highlighted. And then Westlife as well, wherein the outlook on the cost front is now better compared to the preceding quarters. That's the takeaway from their management meet. And Indigo Paints as well, which expects to grow faster than the industry in FY24. That is what their management meet has indicated. That stock also starts off higher by about 1.5%. But not bad at all. Aligning ourselves with the SGX Nifty, it's a 0.5% up in the green start. 18,600 plus levels on the Nifty as we speak right now. 18,635 on the futures. But Kunal, any interesting stocks to trade?
Well, I would look out for PFC. I think PFC, RSC both are looking very interesting and charged up. I think for the first time, these stocks are challenging their multi-year highs for themselves. So it looks interesting. The momentum's come back into the space. So PFC is the stock which I would look to buy.
All right, let's find out what Naresh is picking out for the day. Naresh?
So that would be a buy on L&T. The stock is setting up for a move again. So like the stock is up 0.5%, so a good entry point right now. Stop us at 2200, looking at a target price of 2500 here.